Welcome, and thank you for joining us for today's webinar entitled Bitcoin in China, Chomping at the Bit, brought to you by Kapronasia. My name is Paul Robinson. I'll be acting as the webinar moderator. What happens when you combine one of the world's most promising virtual currencies with the largest country in the world? When consumers in a country are able to shift the price of gold in a matter of a few days through increased demand, what could they do to a virtual currency like Bitcoin? As the Chinese Yuan is a capital controlled currency that needs approvals to move in and out of the country, what are the potential regulatory impacts? In this informative 45-minute webinar, we'll examine the current and future situation of the most talked about alternative currency in decades and discuss the current situation, mining, regulatory considerations, and of a Bitcoin payment and transaction infrastructure in mainland China. Now, I do need to inform you that today's session is being recorded and is running listen-only mode. However, we really want to encourage feedback and questions from you throughout the webinar. To facilitate the discussion, we'll use two features of the webinar software, which consists of two parts. The first is the viewer window, where you'll see the presentation, which I recommend maximizing now so you can see it in full screen. The second is the control panel, where you can interact with us. Now, this control panel can be opened and closed by clicking on the arrow button on the Grab tab. In the control panel, you're welcome to submit questions and comments to our presenter, and we'll be answering as many of these as possible throughout the presentation and also at the conclusion of the webinar too. Now, with all of our housekeeping out of the way, let's get started. Our presenter today is Zenon Kapran. He's Managing Director of Kapronasia, and he's joining us from Kapronasia's head office in Shanghai, where, as one of Asia's leading providers of independent research, custom consulting, and advisory services focusing on the financial industry and financial technology, they help clients understand and navigate the challenges they face in a challenging region with rapidly changing business, operational, and technological environment. So let's get the discussion started. Let's hear from Zenon. Zenon, please go ahead.
Thank you, Paul, and welcome everybody to the webinar today. Now, Bitcoin, obviously, if you've been in the West and paying attention to the financial industry, has been a huge topic in Western markets. One of the things that we identified is that there really wasn't much discussion about what was happening in China, at least in the context of and comparison to what's happening in the West. So that's really the purpose of this webinar and the forthcoming report that we'll be having on Bitcoin in China. The one thing, though, I would say is that this webinar and indeed the report is a very cursory glance of what Bitcoin is and how it fits into China. So if you're unfamiliar with Bitcoin as a technology and how it works, I would strongly encourage you to go to bitcoin.org, and they have some great overviews of the currency itself. We do touch on it a little bit in this webinar, but certainly not to the degree that you'd really want to understand if you want to start investing in the currency. Fundamentally, similar to the other reports that we do, our findings were based on primary and secondary research. So we had a number of interviews that we did with people within the market for our industry research, and those were people that were cafe owners. We have one cafe in Beijing that accepts Bitcoin as a currency. We had several conversations with Taobao and various merchants on Taobao that are accepting Bitcoin as a payment currency, as well as other industry experts who are just investing in the currency itself. That is in addition to any government reports and internet resources. In this case, there weren't too many government reports, and we'll talk a little bit about the government's involvement and acknowledgement of Bitcoin later on. So as I mentioned before, really the purpose of this report is to give you an idea of the issues and trends surrounding Bitcoin in China, analyze Bitcoin-related services in China, and give you some idea of what potentially might happen with Bitcoin in China in the future. So fundamentally, if you're not familiar with Bitcoin, Bitcoin is a virtual currency that was introduced by the pseudonym of Satoshi Nakamoto. Now, Satoshi published a paper in 2008 covering the functionality of Bitcoin and set up the basic infrastructure for what would eventually become the Bitcoin network. The person who actually submitted this paper has never really been identified. So it's the Bitcoin itself is a fairly anonymous currency, and the development of it has been unattributed to an actual physical person, but is given to the Satoshi. That being said, the security of Bitcoin is very strong, and that's one of its key attributes that makes it appealing for users, is because it's distributed and encrypted. So, as I mentioned, the key characteristics: it's peer-to-peer and decentralized administration. So there's no one entity that's behind this. When you think about the US dollar, it's the US government that's behind the US dollar. When you think of other virtual currencies, we'll talk about Qcoin in a second, which was produced originally by Tencent here in China. So Tencent was the company behind it. It's a large internet company in China. But Bitcoin doesn't have a centralized administration. There is essentially, Bitcoins are generated by a network of computers through what's called mining, and generated on a fixed and finite schedule. So there's a certain number of Bitcoins that are produced in every time period, and that the rate of production is actually halving every year. And the total amount of Bitcoins that will be in existence will reach 21 million in 2140. And that's the total amount, that's the finite amount of Bitcoin. So eventually it will reach that total, and there will be no more Bitcoins produced after that. Some of the key IDs of the currency: all transactions since inception are recorded in a large file that is shared and synchronized across all users, and this is called the blockchain. So this is essentially, if you picture writing down every single transaction in a book and then sharing that book with everybody in the Bitcoin network, is probably the easiest way to think about what the blockchain is. Each user, if they want to transact in Bitcoins, will need to have a wallet. And that wallet has two primary components. First of all, a copy of that book or the blockchain, so covering all of the transactions since inception, as well as the public and private key. So that's one of the things that makes Bitcoin very kind of safe and transaction secure, is that every user has a private key for their wallet, and that private key records all of the transactions. Now, that does present a risk as well, because if somebody gains access to that private key, because Bitcoin is not regulated, they could steal all of your Bitcoins and all of your, essentially your wallet, and there wouldn't be much recourse for you if you wanted to go back and try and recover that, because there's no proof that the wallet was yours, and you don't have access to the private key anymore for that particular wallet. Transactions are anonymous, and only a public key or an address is shared. And that's one of the key aspects that's made Bitcoin popular in the West, is that I could send any one of you a transaction and nobody would know that it was me on the other end. Now, that transaction would be recorded in the blockchain, or in the overall book of recording the transactions, but you don't necessarily know who's on either end of those transactions. So one of the characteristics of Bitcoin is that it's very difficult to measure exactly how many users there are. It's not like PayPal, where everybody has a user account, or Alipay in China, where the company would be able to, again, because it's a centralized entity, they can count the number of accounts that are in existence. Bitcoin, because its nature of being distributed, there's no particular way that you can measure it that's 100% accurate. One of the ways of measuring it is through the number of wallets downloaded. So if you go on to bitcoin.org, there's a link to download the wallet so you can set up your own Bitcoin account. If we look at a measure of that, in China is the second largest user of Bitcoins based on the number of total wallet downloads. And in May 2013, Chinese computers, so this could be one computer could be used by multiple users, or one user could use multiple computers, downloaded 84,000 wallets in China, and that was the most around the world. So it seems that China, from a wallet perspective, is definitely catching up with the West, and the US is the number one country in terms of wallet downloads. China is also second as measured by bit nodes. So bit nodes, you can essentially view those as points of presence on the Bitcoin network. So people that are logged in and sharing information across the Bitcoin network. And that was 14,000 users in September 2013. So that's 11.3% of the global total. So it's still a small percentage of the overall total, but it is the second largest in the world. One of the questions that some of our clients have asked us is surrounding Bitcoin. Once we started talking about this a little bit more, is there an arbitrage opportunity? So if you look at, basically, to get Bitcoins onto the network, you either have to trade with somebody else or use one of the exchange platforms to receive Bitcoins. So those exchange platforms are companies like Mt. Gox in the US and BTC China in China. So those are platforms that are online that allow you to log in with your credit card in certain cases, or in the case of BTC China, it allows you to go on and use your Alipay account to essentially fund an online account, which then allows you to transfer that into Bitcoins. And because it's a decentralized network, there's no centralized store of Bitcoins. So essentially, each of these websites has an order book of people that are looking to buy Bitcoins and people that are looking to sell Bitcoins. So when you put in an order, these platforms match up the buyers and the sellers, and then you get either Bitcoins in the case of you buying Bitcoins, or you get US dollars or renminbi or Japanese yen if you're selling Bitcoin. So with multiple platforms allowing you to exchange Bitcoin, in theory there could be arbitrage opportunities. And we looked at this both from the perspective of within a single currency, so within the US dollars, if you compare, Mt. Gox is having a bit of trouble now, but if you compare some of the other online providers like Coinbase or BTC-E, there is arbitrage opportunity. So, one platform might be selling Bitcoins for $120, another platform might be selling for $123. But when you count that most of those have 1% fees for purchasing or selling, as how they make their money, those arbitrage opportunities disappear. And it's quite similar in China. So if you look at this chart, it's the value of Bitcoin in US dollars as compared to renminbi. There are certain points where the growth in renminbi, as you can see, kind of tails behind the US dollar. So if you look at that arrow there for the month right before, the value of Bitcoin was the same. So essentially you could exchange the same amount for renminbi, whereas in the US dollar market on Mt. Gox, it actually went up. So there are arbitrage opportunities, but it's very small, and it's usually negated by the fees that it takes to actually exchange the Bitcoins. So the key factors for growth, for potential growth of Bitcoin in China, we broke them down into visibility, usability, and investability. First of all, usability. Bitcoin in China is getting more exposure to the market and more marketing through a couple of different ways. I mean, firstly, there's just general word of mouth and the social media networks in China. Secondly, Bitcoin was used extensively to donate to the Yan'an earthquake relief efforts. So the relief agencies that were involved in the reconstruction efforts there were able to accept Bitcoin to use in the relief efforts. So that gained a lot of exposure for Bitcoin in China. And then CCTV2, which is a state-owned enterprise, sorry, that should be owned and not owned, enterprise TV station, had coverage and a documentary on Bitcoin. So what's interesting about that is it's a recognition that anything that goes on to CCTV in China is approved by the government. So this documentary at some point must have been approved by people within the government. And so the Chinese government definitely does recognize Bitcoin, as we can see from this. But whether they're doing anything about it is a different topic, and we'll talk to that a little bit further on. The second point is usability. So right now, Alipay, which is essentially considered the PayPal of China, supports Bitcoin insofar as you can go on to one of these platforms that I mentioned before. You can take your Alipay account and you can purchase Bitcoins using the money that's in your Alipay account. So so it's not, you can't buy directly from your Alipay account, but you can go on to one of these exchange networks to purchase renminbi, or to purchase Bitcoins or sell Bitcoins on that network. Qcoin, we'll talk about this a little bit later, but Qcoin was another virtual currency that was set up in China, and we talk about this extensively in the report because it's a good contrast to what's happening with Bitcoin. So Qcoin was set up by Tencent originally a number of years ago, and it was used for virtual currency, for trading virtual products. So originally used for buying your virtual sword or selling virtual food to somebody that was playing an online game in China. That eventually did expand into actual physical goods and physical activities, and became a currency of choice for a number of illegal activities as well. So the government focused on that, and we'll talk about that a little bit later on. The third point is investability. So Chinese are big investors in new products. As if you've listened to any of our other webinars or looked at our reports, the choices for wealthy individuals or middle-class individuals to invest in various products here in China are very limited as compared to what they would be in the West. So in the West, you would have various different stock derivatives, equity derivatives, things within the fixed income market, a number of different investment choices. But in China, it's largely been down to the stock market and real estate as the primary investment channels. Now, this is changing, but Bitcoin offers another venue for investment. And we talk about this a little bit more in the report as well, but a number of the people that we talked to that were holding Bitcoins were either doing it because they were mining Bitcoins or because they believed it was more for speculative purposes, so that eventually Bitcoins will increase in value and they'll be able to cash in on that. One other point about the investability is that the Chinese government can't really, and any government globally can't really trace, block, or crack down on Bitcoin. So, as I mentioned before, the transactions are relatively anonymous. So you can see that blockchain and you can see the public keys that were involved in each transaction, but you can't actually trace who that was. So when you look at a country like China, where the Chinese renminbi, the Chinese yuan, is capital controlled, it does offer an opportunity for potentially high net worth individuals to move their money out of renminbi and into US dollars. So in that case, they would need to find a platform in China or find a person in China that wanted to sell Bitcoins for renminbi. And then on the flip side, in the US or in Europe, wherever they wanted to take their money out, they would need to find somebody who wanted to buy Bitcoins and sell euros or US dollars in that case. So potentially it's a way for large investors or high net worth individuals to get their money out of China, which has a lot of potential in the future, but that's really where the government gets nervous, is because it's essentially the new version of the huangniu, or the yellow cow, that allows you to convert renminbi to other currencies. And the third part is in terms of overseas investment. So if you're looking at investment, if you're not trying to necessarily get your money out of China, but you're trying to invest in other markets, Bitcoin has the potential of allowing you to do that. In terms of actually using Bitcoin for payments in China, if we look at other markets, Bitcoin isn't ubiquitous in terms of payment acceptance. So in certain places like San Francisco, if you have a chance, if you look at Forbes magazine and you search for Bitcoin in San Francisco, one of Forbes's contributing journalists lived for a week off Bitcoin in San Francisco. So everything that she bought in terms of food, coffee, and goods was paid for by Bitcoin. And that's possible in a city like San Francisco, where things are a little bit more advanced in this, but it's far from possible in China. In our investigations, we found 134 shops on Taobao that allowed for Bitcoin exchange. So essentially you could go in and purchase a fixed amount of Bitcoins through a Taobao shop rather than going to one of the other platforms that we mentioned, like BTC China. We found 10 product merchants. So these are merchants that will sell products and accept Bitcoins as payment. And then one cafe in Beijing. So there was one physical outlet that we found in China that actually accepted Bitcoins, at least publicly. So there might be others that accept them and don't make the fact public, but we found one that accepted them in Beijing. So when you look at the mass usage of Bitcoin globally, it really comes down to the ability to transact. And one of the key aspects of that you can read about more on bitcoin.org is the fact that any transaction needs to be confirmed. And sometimes this happens very rapidly, but sometimes it can take about an hour. But if you're trying to buy your latte at a coffee shop, it's very difficult. Obviously, you don't want to sit there and wait an hour before you take your coffee. So various platforms in the West have opened up to essentially guarantee transactions on the Bitcoin platform, and there have been some in China as well. So there's YesBTC, which was launched in September, provides provides Bitcoin transaction guarantees. So essentially that allows you to speed up the transaction process. So the merchant knows that you're good for the Bitcoins and you're able to take your products quicker than you could before. But clearly for mass adoption, the transaction platform needs to increase in China. In other words, it needs to be accepted at more venues for it to really gain popularity. We wanted to touch a little bit on mining Bitcoin in China, and we won't go into too much detail on this, but wanted to give you an idea of kind of what mining was is about and what it is in China. Mining is basically a mathematical process completed by the network of computers that are connected into the Bitcoin network to calculate the next Bitcoin blocks. And we're simplifying it a lot here, but it's quite a complicated process where computers solve algorithms to uncover the next, quote, block in the chain. And then as a reward for discovering that block, they receive a reward, which is Bitcoin. So they receive a certain number of Bitcoins for discovering each block. Originally, when the Bitcoin network was set up, it was quite easy to do this because there weren't that many people that were trying to discover the Bitcoins. So it was very easy for somebody to come along and set up their computer and discover the Bitcoins. Now, as there are many more miners in the network, it's much more difficult for one single person to discover or one single entity to discover a block. So very often people resort to mining pools, and these are essentially peer-to-peer cloud networks of people that are mining under one central computer to discover blocks. And then as the pool discovers blocks, the chances are much better because you have, say, 100 people trying to discover one block as opposed to one person discovering one block. And then those rewards are spread amongst the people. Originally, computer processors and graphics processors were used to mine these Bitcoins at the very beginning. This was very energy inefficient. So oftentimes you hear stories about people whose energy bills would go up several $100s a month just to be able to mine Bitcoins. And so it was very energy inefficient, and high usage meant lower hardware lifespan. So the hardware that was being used for mining through GPU and CPU became very hot. And so when any computer equipment becomes hot, its lifespan typically decreases a bit. So what's come out in the recent year is what's called ASIC mining. And fundamentally, the smallest device is a USB device that you can plug into any computer, and that device gets quite hot as it's mining. But as these devices are specifically designed for mining Bitcoins, it's much more efficient and it uses much less power than the old PCs used to use. So you're no longer using your CPU or your GPU, but you're using this USB key or indeed a rack of USB keys to mine the Bitcoins. Now, what this has meant is that, kind of similar to a gold rush, a lot of people have come in and flocked to mining. So there's a lot of people that are coming in to mine Bitcoins right now. And it's provided a competitive landscape of mining hardware providers, especially when this ASIC mining equipment has come out. In the US, Butterfly Labs was one of the first ASIC mining equipment providers, and they're still going. They often now, because there's so much demand for their products, have delivery issues. So oftentimes the delivery time is unclear. They'll give you a 2-week window and it doesn't necessarily meet that. In China, ASIC Miner was set up a couple of years ago, and it was originally established through Bitcoin fundraising. So people submitted or invested in the company through Bitcoins, and then they bought a percentage of the company in exchange for future dividends. And that company has done extremely well. So they've produced what the simplest one is the block eruptor USB, and then a block eruptor blade, which is essentially a combination of separate block eruptor ASIC chips that combine together into a mining unit. And these products can be quite expensive, which we'll see on the next page. But since inception, about 10,000 Bitcoins, or 100,000 US essentially, in total have been paid to shareholders on the original investments of 400,000 US. So those investors have essentially doubled their money, if not more, in ASIC Miner as they set up in China. Avalon is a Chinese-based company that provides microchips for mining equipment, and the markup on those microchips is quite high. It's about 10 to 20 times. So from what they actually produce them for and sell them for, 10 to 20 times markup. And then ASICME is a company that provides device assembly, so that actually puts together these mining devices. So if we look very briefly at a comparison between these technologies, I think the key thing to note on this is the last row, which is looking at the non-ASIC mining. So this is going back to the CPU and GPU methodology. You could buy a AMD card for about $280 US, which would give you a certain amount of speed, a certain amount of earnings, daily, weekly, and monthly, but took about 4 years to recoup the investment, just because of the speed of the chip and how much you actually paid for electricity. So essentially, this is looking at your total cost for running one of these devices and how long would it take you to recoup that investment. So you can see that ASIC chips has really changed the games, so to speak, in what's happening here. Now, the one thing to note about this is that these dates, so this is today. So if you have an Avalon 20, it will take you approximately 81 days to recoup your investment. That extends every single day, because as you start mining, as other people start mining, as people that are already mining increase their computer footprint so they can mine more, the days that it takes to recoup that investment extend, both because the competition is increasing, and then from what we mentioned before, the growth of the Bitcoin network is actually halving every year. So the number of Bitcoins that are produced every year is decreasing as well. So that makes it more challenging to hit these ROI numbers. In China, there are also a number of hosted providers. So there's kind of two types of hosting services in China. One that provides everything. So those are the ones on the right. And you essentially, you would go to them and you would say, I want to lease this device for 1 week. And you would pay, say, $25. And any dividends or any essentially rewards that came out of that device would be given to you and sent to your wallet. So you can see this on PayPal or on eBay as well. There are many people that sell time on their chips for $25 a week or something like this, and then any rewards that come out of that are automatically credited back to your account. And those are often tied into one of the mining pools as well, so that you get better returns. And then in one of the other services, ASICME provides a mining device hosting service. And this is essentially where you provide your own equipment, but you use their facilities. So they would take your equipment and set it up in a data center and then mine from that data center. So two different options in China. In terms of transaction platforms in China, we mentioned BTC China before. Mt. Gox has obviously been having some trouble over the past couple of months with increased attention from the various regulators and some assets being frozen. So it's a bit unclear what's happening there, but if you look at this, you can still see that BTC is the largest transaction platform in China, but the amount of Bitcoins that are actually going across that is quite small, even in comparison to Mt. Gox. So if you look at something like April earlier this year, that was probably the peak on BTC China, and that's a small percentage of what's happening in Mt. Gox. So there's a lot of expansion opportunity here in China for Bitcoin. So on the last slide here, we just wanted to give you an idea of what we see for the future. The future of Bitcoin is somewhat unclear in China, although it could be huge. When you think about the U.S., has managed to bring Bitcoin up to a peak value of $235, I believe it was, and now it's hovering around 125. But you figure that came from essentially worthless at the very beginning. So the first miners on Bitcoin created the currency from nothing and drove it to where it is today. So there's quite a bit of potential when you think about what the Chinese consumer, as Paul mentioned, had done to gold in the past. So earlier this year, the Chinese consumer essentially shifted the price of gold in China just from their purchases in China. So shifted the price of gold globally through their purchases in China. And the same thing could happen with Bitcoin, because really the awareness of Bitcoin in China is very small right now. And once consumers get an idea of what Bitcoin is, what's possible to do with Bitcoin, that could increase dramatically. But mass acceptance requires development of payment acceptance infrastructure, which is developing gradually in China. Also, the Chinese government's attitude towards Bitcoin will change. So the documentary posted on CCTV indicates that there are people that do recognize the Bitcoin in China. So there are people within the government, but in all likelihood, the regulators that matter, so the Chinese Banking Regulatory Commission, the Securities Commission, have not listed Bitcoin on any regulations that they've put out or any notices that they've put out. So it remains unclear if who in the Chinese government actually knows about Bitcoin and if it will be regulated. The challenge, however, is that because it's decentralized, there's no single entity to regulate. So when KuCoin was regulated earlier on, there was Tencent, And so basically the government could put pressure on Tencent and then essentially threaten to shut them down if they didn't change and regulate the currency a little bit more. That's not really possible with Bitcoin at this point. They can threaten and they can say, if we find out that you're trading in Bitcoin, we can do something about it. But fundamentally, because it's anonymous and decentralized, it's very difficult to essentially put the thumb on Bitcoin as a whole. And the last point is the stability of the currency. Will it hold its value? So the Chinese are used to a fluctuating stock exchange that has gone from peaks and troughs over the previous couple of years. Will they be willing to accept it with Bitcoin? And will the belief, which is essentially what the value of Bitcoin is, the belief of all the holders of Bitcoin in the value of Bitcoin, will that continue? And will that support the currency both in China and outside? So that's all we had for this. I would encourage you to definitely take a look at the report where we go into things in a lot more detail about each of these different topics. But at this point, we'd like to open it up for questions and answers if there are any. And I'll hand it back to Paul to walk us through those.
Okay, thank you, Zan. Thanks for a great presentation there. That's a lot of amazing information about the alternative there of Bitcoin. Alright, so as I mentioned at the beginning of the webinar today, we have been taking some questions as they've been coming in, so I've got some of them to pass Zenon's way. Now, if you've got questions for us as well and you're on the line, you'd like to send them in, feel free to use that Q&A panel up there in order to send them to us. So Zenon, the first one comes from Jackie. It says, even if the regulators do ban or regulate Bitcoin in China, is it even effective?
Yeah, that's a good question, and we kind of hinted at that before. I think the challenge is that because it's decentralized, there's nothing to really stop. So you can't stop an individual essentially from transacting on Bitcoin, or two entities from transacting on Bitcoin, and that's really what scares not just the Chinese government, or what will scare the Chinese government, but other governments as well, is that because it's decentralized, there's no central authority to control that. So there's no PayPal that you can say, okay, stop funding terrorist transactions, stop anti-money laundering. It's much more general, and so there's no central authority that you can slow the transmission of Bitcoin around on. So potentially, what could happen, if Bitcoin does not become a mass market currency, it could still be used by some of these other entities for illegal activities or for money laundering activities, whatever the case may be. The survival of Bitcoin is primarily based on the belief that it does have value. So yeah, although we're not seeing any responses from the Chinese government right now, even if they do respond, it's a little bit up in the air in terms of what they can actually do to control the currency.
Okay, thank you very much. Another one here's come in. This one's from Lawrence, and it says, why are so many Chinese firms going for mining?
Yeah, it's an interesting question as well. It is a bit like the gold rush, and so a lot of people see this, buy one piece of hardware and make a lot of money out of it, and initially, that was the case, and as we saw from the return on investment, it's getting increasingly difficult to achieve those returns that initially were possible. But the Chinese consumer and the Chinese miner is not much different than the U.S. miner. Besides the fact that there have been a couple of really strong successes that we mentioned there before about companies in China that have really taken mining and made quite a bit of profit out of it. So the Chinese love investing and love speculative investments, especially when we've seen what's happened in the stock market and in real estate over the previous couple of years. And in many cases, they haven't seen a downturn in more traditional assets. So there hasn't been, although the stock market came down a bit, real estate still is driving upwards. So the Chinese investors see potential opportunities and don't necessarily see the downside of that. And so that's essentially what we're seeing in mining, is that a lot of people are coming into the market and mining because they see potential for making essentially free money once we get to a certain point.
Okay, thank you. And we've got a couple more coming in as well. Looking through them here. Next one, this one's from Rob. Question is, will there be an eventual strong base of venues in China where you'll be able to transact in Bitcoin, or will it just be a niche currency used for moving large sums of money around?
Yep. Yeah, that's I mean, the same challenge that's being faced in Western markets right now as well is for this to really be a mass market currency, it needs to be accepted at multiple merchants and multiple venues, both online and offline. So if you look at PayPal, what's made that so successful is that online it's accepted at numerous places, and offline increasing through their mobile payments infrastructure. It's being accepted more through kind of face-to-face transactions as well, and that's really the thing that Bitcoin is lacking both in Western markets and China right now, is that acceptance infrastructure. So I think that I would guess that because Bitcoin, the awareness of Bitcoin in China is much less than it is in many of the Western markets. And so if you look at a place like San Francisco where Bitcoin is much more known, the number of venues, there are hundreds of venues in San Francisco that accept Bitcoin. So the potential for that increasing in China is quite high as more people start to know about Bitcoin and realize the value of Bitcoin. But that's where the government regulation could play, because if a venue is accepting Bitcoin, the government can target that venue. So they would have to either comply by whatever regulations the government puts in place, or subversively accept Bitcoin, underneath the table accept Bitcoin. So that would be a challenge, is that if the offline infrastructure for accepting Bitcoins becomes more developed, then that could be a challenge for them.
Okay. All right, we've got a good one here from Eddie. This one says, do you see interest in China's investment community to invest in Bitcoin startups in China?
Yeah, so we didn't specifically look at that, and that's actually a good point that Eddie raises, and we might do that and include that in the report as well. But looking at the success that we mentioned there before with the ASIC miner chips earlier on, there's definitely some success cases of companies that invested more on the mining side of things and have been successful essentially investing in those enterprises. So with that one company that's producing the mining chips, and it essentially doubled their investment. And those were not professional investors necessarily that invested in that, but those were much more individual investors or people, tech industry insiders that saw an opportunity from investing in that company. So I think there would be interest. It's an interesting point, though, and I think we'll do a little bit of research into that and post some of that information in the final report when we put it up.
Okay, great. Thank you very much. Right, a couple more here. We'll probably end up finishing around quarter to the hour, so we've got about 5 more minutes left. So let's get these last couple of ones taken care of. First one comes from Jack, and it says, how important will Bitcoin be for the Chinese in the future?
We feel that it could be incredibly important. For the reasons I mentioned before, I think the awareness of Bitcoin right now in China is very low. So there's a lot of potential for growth in terms of awareness. And as people become more aware and start using the currency more, then it's a natural network effect that more people will get involved with it. It also does, fortunately or unfortunately, it opens up the capital markets a little bit more in terms of being able to get money in and out of China. So for a certain subset of investors, that's quite an attractive opportunity because it allows them to get money offshore. Now, how accepted that will be, because if you're using what's called the yellow cow or the huangnyo, now is somebody that will take your renminbi in Shanghai or Beijing and give you US dollars in Hong Kong or Macau. You have a fixed rate, so they'll give you a rate and they'll say, okay, for your 1,000 renminbi that you're giving me, we'll give you $100 or whatever that exchange rate is. The problem with Bitcoin is that by the time you cash out, the value of Bitcoin could have changed because the stability of the exchange rate isn't really there right now. It's stable insofar that it's trading within a range, but the spread is quite high. So the challenges, there are some challenges by that would inhibit the growth of people using it for getting money offshore.
Good, 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 good. Right, let's do this one. This will be the last question, and then we'll wrap it up here as well. So this one comes from Melissa and says, is there any use case that we will see in China that we wouldn't see in the US?
Yeah, that's interesting. It's a good question. I think the thing that China has really gotten ahead on is online payments and integration with both online and offline services. So if you look at the online payment industry in China now, there's a tremendous business for certain companies like Alipay in doing online to offline transactions. So essentially, starting your transaction online and then completing it offline. So if you look at PayPal, there's no physical interaction with PayPal directly. So you're funding your account using your credit card or using your bank to transfer money into it, or one of the other payment transfer services, or receiving it from somebody else. In China, you can actually fund your Alipay account physically. So you can go to various venues and pay for transactions through your Alipay account. So essentially, you start a transaction on Taobao, which is essentially like eBay in China. So you buy something on the site, or Taobao, or eBay or Amazon. So there's not just auctions, but actually you can buy goods directly. So if you bought a product there, you could go to a physical venue to complete the transaction to essentially pay for that product. And previously they had cash on delivery services, and that was the primary way that people paid for goods, but that's increasingly moving online. So I think a lot of the innovation around online payments could mean that Bitcoin goes in a different direction in China, and in fact gets a little bit more developed and innovative in the payment methods and the usage modes that are being used in China. So I think it remains to be seen exactly what happens, but I think there's a lot of potential in China that Bitcoin could develop in different directions and more sophisticated usage models than it does even in the West.
Okay, well, thank you very much for that. With that said, that looks like we've got through all the questions there. As I mentioned earlier, we have been busy answering those questions in the background, and we have been getting back to you individually. If we didn't get to your specific question, don't worry, we will respond to you individually after the webinar is over. Now, as mentioned during the session today by Zenon, the discussion was based on Kapronasia's upcoming Bitcoin in China report. This report offers some critical insight into China's online payments market today, and was available as part of
Sorry, everyone. I think Paul has dropped off. As Paul was mentioning, the webinar today was based off the upcoming Bitcoin in China report that we'll be publishing in the near future. So please pay attention to our website on that. And there's also a link where you can subscribe to our newsletter. Sorry, Paul, I think you dropped off there. I was finishing up.
I did. Okay, sorry. Go ahead, Zenon.
So thanks again, everybody, for attending the webinar today, and look forward to keeping in touch and having you on webinars again in the future.